I think almost everybody in finance now understands there's something very big going on, and there's a general panic to get out of finance and into this new world. I mean, I get hit up by, everybody from partners of Goldman to asset managers to everybody saying, how do we move to this world? So I think the force is unstoppable. It's the time that's unknowable. But as we know with exponential trends, they always feel slow, and then you look back and suddenly everything has moved. If you think of the exponentiality of what's happened in the digital asset market since, I went irresponsibly long back in, April, March 2020, right? That was a Bitcoin-only world. Yes, other people were involved in other stuff, but then NFTs, DeFi, social tokens, DAOs exploded. This had all been around, and they were like, no growth, like this. And that's what's happening here. I don't know anybody in the financial space who's now not looking to get involved in some way, shape or form. I've spoken to the biggest private equity firms in the world, the biggest asset management firms, the biggest banks, everybody. I've given presentations, endless presentations to, investment committees, boards, everybody about all of this stuff.
Did you think the recent volatility, downturn in prices, changes, any of that are at this point everybody's past worrying about that?
I think everyone now realizes it's a feature and not a bug, that you don't get exponential upside without high volatility. That's how risk reward works. And the question is do you get compensated for the risk with the reward? And a 50% pullback versus the multiple 100% upsides you get over periods of time shows that time and time again, it is well compensated for. So I see no change at all in the number of queries and who I'm presenting to about this. I don't think any of these big investors even care about this volatility, because they need a volatile asset as well in this world, because bonds and other stuff are just non-volatile assets and they can't generate returns, and they've got pensioners who need to reach a hurdle rate and they ain't going to do it in bonds. So they have to take risks. They understand that. I think the traditional institutions remain because of how they operate within the space, the sources of capital, and how actually investors want a one-on-one relationship with the VC investor. But my guess is you will be a part of multiple DAOs in due course, where you are one of the people involved in that DAO, and that's how you'll think of your VC portfolios is, we've got 20 DAOs that we're investing in, that we're part of the discussion, where we're pulling together with other smart people. The Delphi guys are in this DAO, and Andreessen Horowitz are in this DAO, and we're all trying to solve this particular thing, and that's what we're investing in. And then you'll have your own portfolio of other opportunities that don't have this kind of shared structure, because sometimes it's your own view, and you want to back your own view. So I think it's going to be a hybrid, but what it does change is the economics of the industry, because it's so much easier to do via a DAO structure than it is via a fund structure. It does feel like there's a total disruption of the asset management industry that started. It's really early, but it's starting. Because the speed, index funds, the speed of which you can do that in a kind of new Web3 enabled platform is dramatically different. How you can build like Millennium, which is a hedge fund of multiple different fund managers. Well, platforms like Enzyme create the ability to do that decentralized. So therefore, you as an investor could invest across a whole bunch of different strategies and different people, of which it was not available to you before. Whether it's accredited investor rules or just discoverability of finding these people. But with this kind of open Web3, you could scrape all of the data, look for signals on which managers you think. You can be your own risk manager. Okay, that's really, really interesting. It's not easy, but my guess is, people like Jump will have a team of people looking at independent traders operating on these Web3 platforms and backing them too. Because why wouldn't they? And why would Millennium not do the same? And why would Brevin Howard not do the same? They all will in the end. It's going to be not necessarily all on one platform or in the kind of fund buckets that we're used to. I think the US has to resolve much more like the rest of the world. Singapore, I think, has done a really great job of this. And I spoke to the chief fintech officer for Singapore and talked about regulation and how he thinks about it. I said, how are you dealing with retail regulation? And he's like, simply put, is we can't stop people. So what we have to do is give them warnings. So people understand that you can lose your money. Same as if you go to the racetrack and bet. They don't stop people. Why should they stop them investing? That's crazy, right? Betting is a probability game that's actually harder than investing, but people are allowed to bet. So they need to think this through and decide, okay, how do we warn people of the risks that they're taking, that they can lose all of their money, much like people are able to do on Robinhood with options. It's defined loss, but we can have defined loss in crypto. Smart contracts allow us to solve everything. So I think the US is going to have to adopt the same kind of methodology that Singapore has done and other countries have done. It makes no sense trying to perpetuate a system where the money flows has to go through the investment advisors, the investment banks and stuff like that. You need to democratize that. And then you democratize capital. And that creates all sorts of opportunities. So I think the US will change. I think it's a generational battle in the US. And I think it's going to get fought by the millennials and Gen Z now being a much larger part of the voting. The issue is the senators and the congressmen and women are all boomers, really. We got a few Gen Xers in there. That's it. So the generational shift has to happen. The problem is politicians are staying in office for longer and getting older, much like the population is. So that needs to get solved. Singapore has a younger population in certain respects, and many other countries do, and I think that will change. Europe, mixed bag, but I think Europe is less aggressive when it comes to this kind of thing. But the UK is a bit behind, so it's messy.
Yeah. Yeah, I am hopeful that the U.S. will be smart in the regulatory approach. It's a wave that's coming. Like crypto is coming. Crypto is here. Decentralized asset management is here. It's like, yes.
What is clear to me is there's going to be a bunch of DAOs that get spun up for elections funding, and they'll be party agnostic, and they'll fund crypto candidates. Why would they not? If they tried to buy the Constitution, why would they not do this? So it'll show how they can mobilize capital super fast to fund things that ordinarily would have been done behind closed doors in Washington. And that's a lot of voters. So there's something interesting that's going to come of this. It's not really on people's radar screens yet, but that's going to force change.